All right, we are live. Good morning, traders. B. James here, your disciplined day trading dad. It's NFP Monday, and I'm hopeful that the AM session will give at least one good setup. Got a bit of a flexible bias here today. Depending on kind of what the market does, will dictate a little bit more about my bias. I mean, I'm a little more bearish than bullish. I would like to see 930 trade up, sweep some equal highs up in here, and then go back down for some shorts. That's ideal. But it can also sell off, take some sell side liquidity, and I'd be interested in longs potentially here too as well. So going to wait for a little bit more information. The last week or so, 930's open's been high resistance and S seek and destroy. And then the move's kind of coming more so around 10 o'clock. So we'll see if that happens today again or not. So yeah, looking at my trading scorecard here, we can see last week ended up with 99% A plus with no missed R, at least for trades that followed my rules. I did notice that I have some kind of brackets of time that I'm looking for trades in, just windows that I've focused my time down into, so I'm not staring at the charts all day. And I noticed that last week I missed a lot of setups that were outside of my time windows. And so I decided that rule was one that needed to potentially be looked at, and I'm going to be paying attention to that a little bit more. I don't want to just to ultimately remove it altogether, but I did widen my trading windows by some bit of time to maybe optimize and capitalize on some more of that missed R. And then the other thing being this week here, I missed 5.2 R, and that was just a no good week of several bad luck mistakes where a winner turned into a loser. Obviously that happens, makes a big difference quick when you take a -1 R instead of a positive 1.75 R on the trade. So that was my big thing for June, was just a lot of missed R. And I don't know why that says realized R is 1.5. It should be 3R. Anyways, we got 4 minutes here until open. And one thing I do want to say real quick is if you're struggling with breaking through to being a consistent trader, if the emotions are getting to you, if it's easy to overtrade, revenge trade, take trades that are outside of your model, or if you're just kind of struggling in general in trading, this right here has made a big difference for me. This is I've been using this for a little while now. I've been using two versions of this. I initially made another version and I used it for months, and I noticed that it helped me so much. It was just like a paper one, that I actually built this consistency lab app, and has been just a massive game changer for me, where I'm focused here on my results within this dashboard as opposed to my P&L and my TradeZella dashboard. And trading has become so much more less stressful. It's been amazing. So I'm thinking about, this is my own app, and I'm thinking about building it out for people who are in my Discord. So if that's something you're interested in, and you'd be interested in using this app, leave me a comment below and let me know. If we get enough people interested, then I'll add multi-user functionality to it. But let's see what we got going on the charts. We got 2 minutes until open, a little less. So we're sweeping outside of this 15-minute range that I was kind of eyeballing. We have two kind of scenarios that I'm looking at here on the 15-minute. There is about a 25% chance that New York trades up, retraces to 50% of London range, which is the purple box, and then continues. That's kind of about a 25% chance. And then the other is a 60% chance of a sweep of London high and then coming for London low. Usually, New York AM, at least the first part of it, continues the London trend. So let's see here. I like that we swept outside of that range there. I'm not necessarily stoked about being bullish at the moment. There's a 1 hour tailless candle that was already swept. We have these equal highs above. Little bit of LR up there, but that's a little far away. We're kind of trading up in this wedge. So we're building liquidity on both sides. We have a daily candle right here that opened with no tail, keeping that in mind. So we're pushing up more into premium, meaning I'd prefer shorts. Kind of looks like 930 setting up for a long though. But we swept a 4 hour high in this volume imbalance. Here we're sweeping a 1 hour low. We do have SMT currently forming. All right, just trading down into midnight open. And look at that open. Let's check and see how big this is already. So that's a 113 point candle, 450 ticks. Not tons of amazing liquidity built up right up into here. All right, we did tap into midnight open. We did sweep London low. There is SMT with London low. However, this wick here doesn't really give me any ability to get into a long trade. It's a nice looking candle. And give me a like or subscribe. I'd really appreciate that. It would help a small channel get my content out to people who need mindset and consistency in their trading. So there's this inversion right here. It didn't close above that. We also have another inversion right there. And then we have some, like a large 2-minute inversion. All right, so it swept these highs right there. We do have 1 hour equal highs above. So this here is a breaker and inversion. It swept this right there, making me feel a little less confident in it, but we do have equal highs above. We do have this wick right there. All right, so closing above that inversion right there. I'm going in with cut risk on this. I guess just because I had been doing that. So in this case, what am I going to do? I'm going to go TP at 1R right there. Okay, we're pushing up towards 80+% of my TP, which means I'm going to go break even almost 90%. Go break even on it. I want to check for the 1 hour equal highs. That's what I want to target. They're at 744. So I'm a little higher than the equal highs, which means the Asia high is kind of it. So maybe I'll adjust my TP just a little bit to take Asia high. And the reason I'm doing this is I noticed that the last couple weeks, we've been getting trades that were so much bigger than what I would typically size for. In other words, I would typically use 2, 3, 4 micros, on a trade and be able to take partials. And with these huge stop losses, I've been only able to take one for a cut risk when it comes to sizing on these trades. And then they'll hit my TP1 and not go and retrace to break even, and then continue to TP2 without me. So in this case, it actually looks like it's probably going to just take me out of break even here. And so what I found is if I just would have TP'd at TP1, I would have won three more trades last week, 3 out of 4 break even trades. So that was kind of what I decided is now if I have to go in with 1 micro, I'm going to TP at 1R approximately. All right, so I'm out of that trade, which really, let's see what happens here. We have SMT. We do have SMT. I just wish we had better targets to the downside. So that makes me feel like it's not going to continue for sell side, but we shall see. Again, the last several 930 opens have been a high resistance, seek and destroy sort of environment. And so I'm keeping that in mind that this could sweep below, sweep a high, sweep below, sweep a high, and then 10 o'clock comes the reversal. And then this has been doing this a lot too, where we have inversion like this, and price really retraces deeply down into it. So the big thing to take away is price is behaving differently. And we just need to be aware and adapt to that. Okay, so it looks like Asia high is the equal highs, the relative equal highs. So there's this high and that high, pretty close. So I'm not interested in in a short with this liquidity sweep down in here in midnight open. If it didn't do that and it traded up, took Asia high, I would like a short. So it took a 932 long, a break even because it hit 90% of my TP with 1 mic. And I just make that note right there so I know it was a 1 mic trade. And I probably could have gone in with 2. It's just I'm trying to get around 200 risk per trade. So that's 245 risk, which divided by 2 is 125. So that's 250. Like, not that my account can't take that. It could take a $250 risk trade. This to me just didn't look A+ enough. Like, how to say, NFP week, the context, NFP week and longing and premium. So right now it's kind of looking a little bit like it wants to do the New York opening high resistance. So just kind of one of these things, whether it's bearish or bullish. That's what it's done. I think 4 out of the last 5 days, 3 out of the last 5 days, something like that. So here we have the first presented fair value gap. It's getting flipped again. So the gap was created, the gap was flipped, and then the gap is flipped again. Still leaving these equal highs above. There is a tailless candle right here. It might want to go for these equal highs. I don't have any way to engage with this. The 30-second was it, and I didn't see it. That probably would have given me, yeah, much a better stop loss for sure. And it would have given me a partial. You know, I'm still a little more bearish than bullish, because the higher time frame doesn't make sense for me to come to be at a reversal zone for bullish delivery. You know, here we're in this weird range. We're coming down into discount. We swept these lows, but there's this, you know, volume imbalance that's been used a few times, but there's no fair value gap. This low hasn't been swept. And then when we look at the weekly, you know, we're kind of consolidating above a bunch of inefficiency on the weekly. And so to me, it doesn't make a ton of sense that we're not coming down for more sell side. Bunch of resistance above. The daily's currently trading at a volume imbalance. Although the previous day high is closer than the previous day low, however, there is no tail on the daily candle. 4 hours coming up here into a premium. Okay, so these equal highs on the 1 hour swept. Building a little bit of liquidity down here. We kind of have some semi-relative equal highs. We have this swing, we have this 930 wick. Looking better for a short. We're trading into a 1 hour volume imbalance. A little early, I feel like, maybe. And also just noticing that it swept London low. And that's usually continuation. Previous day high right there. All right, so the 15-minute candle closed rather bullishly. So here's a 30-second inversion. I wasn't quite quick enough. Probably could still get in if I wanted. Part of me's hesitating. I'm trying to figure out why. I feel like it could be offside. Okay, so the short was it, potentially. Let's see. No, no. Okay, so correct call on that, probably. Still wouldn't mind shorts, though. I would like to see a little more liquidity built up down in here. What's that at 9? I feel like London low being swept does not help me want to be bearish anymore. And I guess I'm reevaluating, seeing that we swept London low and then went back above London high. I think it's, I guess now that I'm seeing that, I feel like it's a little more bullish. Seeing how the 15-minute closed. But again, it's usually 10 o'clock. The last week or so, we've seen a reversal. So here would be the Judas, the fake move up. And the reversal would be around 10 o'clock. So just look around. So here's the old new day opening gap. So here's this inefficiency down in here. Maybe it wants to trade up into here before the shorts, at which point the shorts would look pretty juicy. And again, I've inverted this chart just to kind of look at it a little differently. Look at this, interesting. A little bit of consolidation. Now it's wanting to trade down some. Equal highs. Five-minute is not producing any gaps here on NQ. But this is definitely following suit with what we've seen the last number of openings, where trades down, trades up, does a deep retrace, trades up, does a deep retrace. It's starting to look like that high resistance liquidity run. "30-second inversion," which is kind of nice, but it already swept these equal highs. There's no gap down in here. Maybe there's a 3-minute. No, not even a 3-minute. Not even a 2-minute. There's a 2-minute suspension block right here. Didn't touch it. So what we can tell, because it's not making any gaps, it's not acting fully normal to me. Let's see if we put in a gap right there. Okay, so we did put in this gap finally. Getting a bit of accumulation. So at this point, there's no real resistance levels. Like there's a 4-hour volume imbalance right here. I would feel like so there's that resistance, but then above it, it's pretty much the next level is this previous day high. I don't like how this candle swept these lows right there. That kind of reduces my confidence for any short. We got 5 minutes left on the 1-hour candle, and if it's going to close anywhere near this, it's relatively bullish. But it swept those equal highs. That's looking kind of nice. $160 ticks, so that's about 75 per contract. It's pretty heavy. It's looking like it wants to go. missed my chance probably right there. Wasn't quick enough. All right, so TP1. Bummer. I was just too slow. Okay, so there we go. TP1 and TP2 in the matter of one candle. And that was too slow on my part. I was kind of reevaluating this. I was looking at this consolidation. I was taking in this manipulation up in here. And in that amount of time, I was looking at that. It came up into right where I wanted to enter and then just sunk. Didn't give me any time to get into that one. And that was the 10 o'clock reversal, I bet. Boo. Boo, B. James. Boo, you were too slow. You know, it wasn't fully, I wouldn't say A plus either. And that's in part, I think, why I kind of stalled out for a second. Is this consolidation is not typically what I want to see. I want to see the inversion up in here outside of the consolidation. So it's more accumulation, manipulation, distribution. But the manipulation happened really shallowly here in this setup. So, but hey, you know, it's part of the game. And that's probably where I don't know, like I struggle the most, I feel like, is being more aggressive. But I feel like every time I start to be more aggressive, I tend to lose more. So I haven't fully figured that one out. But I also tend to like sometimes miss it just like that. And I say sometimes because, of course, you're going to miss moves, but I think a little bit more than I think is necessary. You know, I guess if I'm looking at this, I'm not trying, it wasn't fully light bulb either. I was saying earlier, the fact that London low was swept and then we came all the way back up to London high, that kind of wigged me out a little bit. Don't usually see that. So I'll have to, after this stream, maybe come back and with some, as much honesty as possible and not trying to protect my ego, relook at that and wonder, you know, what did I do? Why did I do it? Oh, look at this. I didn't see we have some near equal lows right there. And look at that. Just like that, the 1 hour candle is going from rather bullish to rather bearish. And it's going to probably close down in here. Let's invert it, see what it looks like. So yeah, not 100% A plus either with this liquidity sweep here. I think that really threw me off. Because even if this was bullish, I'd be sitting here going like, yeah, I don't know, maybe. Be like, oh, it swept buy side, it's sold off and it's consolidating here. And be like, I don't know. But at least the thing I want people to notice is I didn't scramble to get in. I didn't force it. I think there's something to be said for that too. There's no other way to get into that for me. So here probably comes the distribution phase. So what's the target? Let's see here. Equal lows at 2 standard deviations look good. So coming down for those equal lows. Okay, equal lows swept. Now what? Don't really see any levels I'm interested in. Just keep selling. So two and a half standard deviations. Probably expect to see some kind of reaction at this level. Maybe a continuation setup. Maybe. Now here's where I don't have a great continuation model. And I wish I did sometimes, but I want to master my model first. You know, if price creates some kind of consolidation down in here, what's going on? What's going on? My keyboard's in the wrong spot. That's why I'm not pressing the right buttons. Price comes down here, makes some sort of consolidation, manipulates. Then I would have something potentially. But in terms of like getting in on a fair value gap right there, I don't have any model like that. Not yet, at least. Someday, maybe. Someday when I've mastered, when I feel like I've completely mastered my model. But with NFP week being this week, I think we have NFP Friday, Thursday. Friday's a bank holiday. Really? I wonder why that is, since the 4th of July is on the 4th, which is Saturday. Ooh. Monday of NFP week does tend to be the least likely of, that's not totally true. Second to least likely day. Trading day of the week. Tuesday's the least likely, and then Wednesday, Thursday tend to be better days, but it's, I guess we have Wednesday, Thursday. So yeah, if non-farms on Thursday, we'll see what this week holds. I think that's the question I just realized is like the question of it up in here. I didn't mark it in on candle close. I was looking around and maybe going to catch some type of retracement because I totally could have marked it in on that close, but I didn't. So with that hesitation there, I want to use the candle close as kind of a gauge or a trigger point or a particular, what's the word I'm looking for? Some kind of measurement point, I guess, is the idea for if I'm not ready to enter the trade by the time the candle closes, what does that mean? In other words, does that mean that for whatever reason, unseen reason, I wasn't confident about this setup enough? And I wasn't. It wasn't, A plus, but was it A grade, A minus? Where was it? And maybe the failure was when I saw this gap form, I should have been spending more time evaluating if this inverts, am I interested? Because I was interested. This swept the equal highs I was interested in. So why wasn't I a little more prepared? I think that's maybe the question I'm wondering. Wow, look at this. So continuing down for Asia's low. Now, this isn't looking really good for longs, in my opinion. What we don't have is we don't have any liquidity really built up. We just have a sharp sell-off. And when it looks like that at a steep angle, the reversals tend to fail. They just keep going down. They do this kind of thing. I don't want to see that. So that's 500 handles, 2,000 ticks. Almost, yeah, almost. Or points, excuse me. I said handles. So really, I got what I wanted. It says I wanted to see 930 trade up for shorts and trade down for long, or trade down for long. So that was acceptable, but my primary was seeing shorts, and I just hesitated and I missed it. So I gotta live with that. I'm okay with that more than I am taking subpar setups, FOMOing in, and screwing things up like that. That I would feel a lot worse about. There'll be another opportunity. There'll be another trade. Just not quite right now. And I imagine this is the direction for the day. So I'm not imagining we'll see a reversal until potentially 11. If we swept this Asia low and it looked juicy for longs, well, maybe I'd take a long, but it doesn't. And this is part of trading, I guess. Maybe I'm wrong. I don't know if your thoughts are, but sitting around is part of it. Missing setups is part of it. All right, so tapped into the weekly open, tapped into the new week opening gap. So those are some nice levels. Asia low, electronic trading hours open, weekly open, new week opening gap. Like, there's a lot going on for a long right there, but there's just no liquidity. Huge stop. 300 ticks, 75 point. All right, so we're on a new 15-minute candle. Like, there's a lot going on for this long here with the exception of the lack of targets. enough so that I'm not interested. Time-wise too, I think we're distributing for sell side. So really I'd expect any sort of reversal more towards 11 o'clock. Here on the 15-minute, we have these domino lows. So yeah, what now? Do we keep trading? Do we not? You know, I'd like to see it consolidate. So it'd be nice to see a consolidation over the next 10 minutes, form a 15-minute fair value gap, and watch price kind of trade up into that fair value gap, sweep it for the domino lows that are below. And this is the boring part. I'm noticing lately that it feels like the 30-second time frame has been a little bit better. And I'm wondering if that's because of the volatility that, we're seeing almost twice the volatility every day in the last few weeks that we have over the last year. And so has the 30-second become the 1 minute now, if that makes any sense? Or the 30 seconds equivalent to the 1 minute just a few months ago kind of thing. So I'd like to see some liquidity built up right down in here. All right, so close above that inversion. All right. Just curious, like here's this candle, would have marketed in, close below, right there. 335 ticks, so that's 150 per contract. Here's 1R. As I was saying, for one, this didn't invert very quickly. For two, there's just not much in the way of targets. I'm not interested. But I am interested in potential short if it can provide a setup. All right, so that would have been 1 RTP on that one. Cool. And oh wow, it's closing in the whole 15-minute gap. Almost. It's going to only leave a tiny gap. So we have a small gap. But this is looking a little, I would like to see a little more LR down in here, really. All right, so a new 15-minute candle. We swept some internal liquidity. Okay. Okay, so we're pushing through that 15-minute gap. And similar to this down in here, we're just kind of floating up now, not really creating much of a swing or many swing points to target. We do have these 5-minute inversions here. One here, one here. Tapped into midnight open. Curious to look at this trade here. 1.5 so far. That setup, I didn't take that trade. Not really seeing a reaction I want to see here. And like, this is one of those days where it's like, I could have taken anything. And, or if I would have taken all of them, I would have been up on the day. I think there was one loss, this 30-second right here. I took this one break even right here at the 1 minute, or the 9:32. And that's a pretty deep retracement too. So past the 50% level, coming back up to this first presented fair value gap again. All right, I think I'm going to call it there. I don't think I'm going to have anything. So I'm good with